What are futures in trading? What futures you should trade, especially as a beginner? When? And most importantly, why you should or should not trade futures. If you're curious to find out the answers of all these questions, stay tuned and watch this video. And without further ado, let's get into it. So first off, what is futures in trading? Futures are contracts made between two parties who are obligated to transact a certain asset at a given price at a predetermined date. Those contracts got an expire date and prices are known upfront and they are no subject to change. The price agreed upon must be paid regardless of any moves in the market. And I'll give you an example. If you are a vinegar business owner, you produce vinegar, meaning that you're gonna need apples. Because you're in constant demand for apples, you would want to have a regular supply and therefore you are looking for a supplier who can deliver you those assets. So you are signing a binding agreement with the buyer. He's gonna deliver you the apples on a certain day at a given price. The price is not subject to change regardless of any moves in the market, and whenever that day comes and the supplier delivers you the apples, then you would have to pay what you've already agreed upon. In a way, we can say that futures contracts have been designed to provide predictiveness for business owners, and regardless of any moves in the market, the prices who are already agreed upon are going to stay the same, meaning that you'll be able to operate on the same margin. In modern day, futures can involve a variety of assets such as commodities, stock indexes, currencies, and others. The key thing I want you to remember from this is the word contract, because we're going to be repeating that over and over again, because in the world of futures, contract is everything. On the question what you should be trading, I've got a pretty straightforward answer. Especially if you're a beginner, you should be trading the S&P 500 index, because the S&P 500 index, it includes 500 of the largest publicly traded companies in the US, meaning that you'll be able to trade an index on a macroeconomic level. I mean the big picture. And this is key because nothing too crazy can happen on that market. As you can see on this chart, in the most recent pandemic, the market was definitely affected, but survived, and as you know, many companies did not. And this index, compared to many other cryptocurrency bubbles, is not going to die overnight as they did. Another index that you should become familiar with is the Nasdaq, which is very similar to the S&P 500, with the main difference is that the Nasdaq contains 100 companies compared to the 500 in the S&P. However, Nasdaq is not beginner friendly as it is very volatile compared to the S&P 500. Therefore, you as a beginner, you wouldn't be able to digest the information that the market's given you as quick as an advanced trader. The Nasdaq is preferred by advanced traders because there are bigger moves happening on a daily basis in the market. However, I would definitely recommend you keep a Nasdaq chart if you're trading the S&P 500 or vice versa. In many of the trades that I've made, I've seen breakout in the Nasdaq, which has encouraged me to hold my long trade and to, just wait a little bit more the S&P to react as well. So now let's answer the question why you should be trading the S&P 500 futures. And the first reason I want to put forward is because it allows you to start extremely small. And that is key for beginners because at the beginning you'll be making plenty of mistakes, and that's not only because you're going to be taking the wrong trades, but also because you have not developed your trading psychology, which is key in trading. On the S&P 500, there's two types of contracts who are mini and micro. The mini contract requires only $400 in margin, meaning that with only $400 in your account, you can purchase one contract. And the micro, it's 10 times smaller, so it only requires $40 of margin for you to purchase one micro contract. And the micro is the golden ground for beginners because you'll be doing exactly the same thing that you would do in mini, but you will risk 10 times less money. Another reason why you should trade futures is because of the simplicity and the market hours. In the S&P 500 futures, 5 ticks are considered as 1 point, meaning that for the 1 point move, you would get 50 if you're trading mini or $5 if you're trading macro. For example, you believe that the price is going to go up, so at 420 you are buying one contract and you hold up to 422, and at that level you decide that it's time to take profits. Therefore, you sell your contract to a person who believes that the price is now going to go down and you are out of your trade. So for those 2 points that happen there, you're going to get $100 if you're trading mini, or you're going to get $10 if you trade micro. And in this example, I want to highlight on something that is key: the transaction between sellers and buyers. That is what the market is all about. And guess when those transactions can happen? nearly 24 hours a day, meaning that regardless of your time zone, you can always trade futures. Now, please bear in mind that the S&P 500 is a US stock, meaning that the market's going to be more volatile during the US hours. That is obvious, but I wanted to share it regardless. You can still trade the S&P 500 outside the US hours, but the trade's going to take longer. For example, in the US time, I have trades that made, let's say, 10-point move in less than 5 minutes, which is not happening that often outside the US hours. For me personally, living in Europe, the timing is just perfect. You can easily have a full-time 9-to-5 job and trade after you finish, because then I'll be trading just after the US Open, and that is ideal for me. I can easily combine a full-time job with my trading at the same time. Now, another thing why I recommend the S&P 500 futures, and it's connected to the time, is that it doesn't take a lot. The moves that are happening, especially on the US time, are very quick, meaning that in less than 2 hours a day, you can make profits. Compared to options or another swing traders, they wait for hours, even days, weeks, etc. But in futures, depending on your strategy, of course, trades take only minutes or even seconds, as I said. So you can, but you don't have to actually spend 8 entire hours trading. I only trade up to, let's say, 2 hours a day. But quite often I trade 1 hour, even less. Again, depends on what your strategy is. But overall, I would say that you don't have to commit a big proportion of your day for you to trade futures. And now let's get to an extra tip, and it's why you should not trade futures. If you think that trading is a way to get rich quick, you shouldn't trade it though. I personally started trading because I want to have a secondary income and not because I wanted to get rich quick. In life, you got 3 important assets. That's time, energy, and money. And if you're not willing to invest a big proportion of your time and energy, you would not succeed in trading. Do not think that the size of the account is the most important thing in trading. And you should know that funding your account with an excessive chunk of capital that you're not sure how to spend would not make you a good trader. Many of the traders reach success 2-3 years down the journey, even for some it takes longer. Of course, it depends on the person, and some traders are picking up quicker compared to others. So now let's make a quick summary on the question why you should trade futures. First off, it gives you access to the S&P 500, which is one of the most common and stable markets on the planet. Second off, it allows you to start extremely small, practice and learn while making mistakes and not losing big amounts of capital. The third reason is the simplicity. I mean, compared to, let's say, options, it is much simpler to trade futures. Number 4 is that the market is open nearly 24/7, meaning that regardless of your time zone, you can trade futures. The fifth reason is that it's not much time consuming. Most of the futures traders I know trade approximately 2 hours a day, and they get along with the rest of their daily activity. An extra tip: you should not trade futures unless you are willing to devote enough time and energy in learning and practicing. Do not believe in the illusion that trading is a way to get rich quick without putting any effort in it. Thank you very much for watching. I really hope that this video was useful and you were able to learn something new. If you liked the video, please express it by hitting the like button, and if you want some more relevant content, please subscribe to my channel.